Good morning, everybody. I'm Ed Parcaut, and this is Real Estate Jerky Daily. Mike Kelly's still vacationing. He's at some conference. It's vacationing to me because I always go there to play around to a certain point and learn a lot, of course. But I want to get into the commission thing in a second. A couple more things I want to talk about, but first, let's get into consumer confidence. The read for March. Missed analyst expectations. Shocking. Is anything ever coming in on time like they think? Consumer confidence came in at 104.7, which is they thought it was going to come in at 107. The biggest issue still is the persistent inflation is affecting consumers. Shocking. Like we didn't know this. Durable good orders, which reflects new orders placed with domestic manufacturers for delivery. Factory orders, hard goods was released for February, and it increased 1.4%, which was above expectations of 1.1%. So people are buying. Like you keep saying, we keep spending money, and that's our problem. We keep spending money, and we keep making this worse. All right, so Case-Shiller and Federal Housing Finance Agency House Price Index both show that everything's great. House values are going to continually to rise, even in this market that everybody thought we'd have a bubble. No bubble. No bubble. Case-Shiller Home Price Index, which tracks changes in value of residential real estate across the U.S., was reported. They came out for January. They're always 2 months behind, not 1 month behind. The index covered 9 U.S. Census divisions and reported a 6% annual gain in January. Ooh, up from 5.6 read in December. Shocking. Like we didn't know this. All right. The other one is the Federal Housing Finance Agency. And remember, that one just measures single family homes with conforming conforming loan limits. There's the word I was looking for. That decreased by 0.1% in January, which is normal because of you have a lot of different things going on with weather and everything else, and decreased 0.4% year over year from previous revised report to only 6.7% to 6.3%. So we're still up 6% overall, basically, if you average the two. So I had somebody the other day called me, I should say yesterday, for a VA loan, which is not shocking. I get a lot of those calls. He wanted to do it with his mother, which we can't do VA with your mother. You can only do it with another veteran or your spouse. Yes, I know there is one loan out there that you can add somebody on and do a VA loan with, as long as you want to make 12% down payment on their half of the mortgage. So if it's a $500,000 home and you split it 250 to the vet, 250 to the other person, they got to put 12% down on that. So why would you do that? Go FHA if you're going to do that. All right. So we've just gotten to a point where VA loan is like one of the best programs for buying homes. One, they don't need a pest report anymore. There's no non-allowables like there used to be. There's none of that stuff anymore. It's just like a conventional loan that doesn't have to have down payment. Well, problems coming because of the commission things that just went through. A lot of people don't realize VA loans, you can't, as a veteran, can't pay for the buyer representation. So that the buyer's agent commission, you can't pay for that on a VA loan. Only way that you can is if you got closing costs credit from the seller to pay for that. That's the only way to do it. So they've reached out to VA, U.S. Department of Veterans Affairs, to see about getting that changed, because that's a problem for vets and active duty members who are trying to buy homes, and now they can't get into them if eventually all this changes to where the buyer is responsible for the commission. It could really mess up for the vets. Always something changing our industry. If you don't like it today, don't worry, it'll get worse tomorrow. And that's how we work. And so this whole commission thing has messed up everything for first-time home buyers, families with lower incomes, and veterans. And they can also say minority homeowners, because of the fact that they might not have the money to pay the buyer side of the commission. So there's a lot of things we need to work out here, and it's not going to happen overnight. It's going to take months, years, all this stuff it's going to happen. But eventually VA needs to change their guidelines to allow vets to pay that, if that's the way we're truly going. I don't know if that's truly the way we're going. I think everything's just going to be more of a buyer broker agreement, and they get paid no matter what, as long as there's commission. And I'm sure sellers are going to want to pay. This is all about clarifying and allowing people to also get in and not pay as much, because everybody thought you had to pay 6%. That's not been the way it's been for a long time. All right. So this week, what we have left is Wednesday, we have mortgage applications, Thursday, fourth quarter GDP final read and initial jobless claims, pending home sales, and Friday, PCE. That is the big number that's going to come in for this week. I would tell you, I locked all mine in just in case. I can always move it to a better, different investor, or all the different things you can do, but you should protect your people going into that, because we don't know how that's going to read. We just don't. Nothing's been coming in the way we expect it to come in. And there you go. So a few things I went over. Case-Shiller, FFHA went up. Values are still growing. VA is consumer confidence is coming in lower because people are the inflation is affecting them, shopping and all that. Durable good orders are up, so people are still shopping because they have to. VA loans could be a problem going forward if they have to pay the buyer side commission. All right, everybody, make it a great day. Thanks for being here. Mike will be back on Friday. All right, thank you. Make it good. All right, bye.